And then we go to a multi-year sell-off in the dollar, which means a multi-year rally in commodities. So if we look at silver, so we can pull that up as well. Silver is one of those beasts that can just, it'll play catch up. You don't know when, but when it does, it is a rocket ship. And this chart here is primed and ready, just like the gold miners.
Chris, how are you, man?
I'm good, Andy. How are you?
I'm doing really good. A lot of stuff going on in the markets here. And I'd love to get your perspective specifically for our listeners and viewers, the gold and silver markets. What are the charts telling you? And what is your perspective going into the new year?
Yeah, so there's a lot to kind of cover when it comes down to gold and silver. I think a lot of stuff really hinges around the gold price. So if we take a look at gold, let me pull up let's start on the big level view of gold, kind of the big picture. Let's go right to the monthly charts. And so there's some interesting things here that are unfolding. So first of all, we've got these highs, these wick highs that we've seen on the chart. And this here has kind of been the ultimate high up around that 2089 area. And then, of course, we saw this huge kind of blow off kind of move, this huge rally and breakout, which got everybody really excited. And it really shook the market out. At this point, it looks like a very big shakeout in the markets. It's running the stops because I think there's a lot of people with betting on lower gold pricing, believe it or not. And then there's also people who say, well, when gold breaks the new highs, I want to get in and catch the next rally up. So, this type of bar on the monthly chart is a very bearish one, something that runs up and then gets sold into and slammed. If it closes down here, we're probably looking at 2 to 3 more bars, red bars, and it potentially could go even longer than that. So this is from a longer standpoint. This bar, depending where December closes, is a very bearish or a very powerful sign. If it closes back up near the highs, it'll be a very bullish sign. But there's a lot of things telling us that this bull market doesn't seem to have legs behind it at this point for gold. And a good view of that is actually, if we take a look at, let's take a look at gold on the 10-minute chart. Let's just zoom back a little bit here. We can see the spike that we've got in gold. And from a technical level, this is a level right across, just grab a line, right across this little peak high. This is where gold broke to new highs. And of course, happened in kind of overnight pre-market trading. And this is where there's going to be all kinds of automated trades going off. So there's people who are short the market saying, when the market hits a new high, get me out and buy back their shorts. So we saw this huge, huge volume move. If we zoom in, we saw automated buying. We saw all the shorts get squeezed out of their short trade. Plus everybody who wants to buy and has an order standing saying, get me into gold when it hits new highs, they all piled in at the exact moment, driving the price up. And typically when everyone does the same thing, when shorts get covered and everybody piles in buying, the market likes to go the exact opposite direction of the herd mentality. And of course, we have seen it here just really reverse and sell off from that spike. So this really is like what the market is best at doing, getting you out of a good trade, which at this point, the trade would be the shorts get squeezed out of their short trade, and then gold falls. And then of course, it does really well at getting people long something and then reversing and going down. And this is where pure emotions and things come into play and can frustrate people. This is where you need a really good, strong strategy to be able to navigate this stuff and manage risk, or else you can take some pretty big losses. So that is, to me, this spike in gold. If we go and take a look at let's go to the daily chart. And if we look at gold for this same kind of time frame, zoom out a little bit, we have these highs. And the futures market shows that we've gone higher and we broke out. But if we take a look at GLD, so if we just look at gold during regular trading hours, whereas most of the volume is traded, you can actually see we didn't break this high. In fact, the market gold is still kind of struggling just in this upper resistance range. So that's one, like, I like to really follow what price does during regular trading hours. So to me, it really kind of allows you to hone in to see where the big volume is, where the real movement is, because majority of people are investing in trading during regular trading hours. So the average investor never really saw this big spike. They all heard about it. they all piled in, but really when they think about it, the time that they get in, it never even really did break to new highs. And then when we go and take a look at the gold miners, just to kind of break things down, if we look at, say, GDX or even SILJ, they're all doing the same type of thing here, which is they've been going down for the past couple of years and they are nowhere near the highs. If we go back and look at the 2011 peak up here, gold miners should be trading up here if gold is really breaking to new highs. If not, gold miners should actually be a whole lot higher than that. So the fact that they're way down here off 50% is not a very good sign. And of course, on average, they're making lower highs, lower lows. Silver and silver miners are doing the same thing. So I don't think there's a lot of confirmation yet in the overall precious metals market that we're really breaking out. In fact, a lot of times when you get a fake out in the market, it can actually be a pretty big move in the opposite direction. I'm not saying that's going to happen again. I actually think when we look at gold miners and silver miners, they built this multi-year base. They've had a very strong run up, and now they're really just putting in their time, grinding a launch pad until the perfect storm, the scenario comes together, which I think is going to be sometime next year, where we see all these things take off. So, I mean, that's kind of the whole precious metal space kind of condensed, at a high level view, but that's kind of what I see unfolding. And I do see weakness in the precious metal space when the stock market, I think, goes into a bigger correction, because typically it's going to create all kinds of selling pressure. We're also going to see the US dollar probably rocket higher. Both of those are going to pull precious metals down, even though they're seen as a defensive play. They pretty much always get sucked down temporarily with it. So, I mean, I covered a lot there. I don't know if you want to.
No, that was great. I guess what I would have to say, if you're expecting the dollar to rally, that would have an inverse relationship to everything here, is that more or less it goes into the story, the narrative, I guess, of a liquidity play then. So if the dollar rallies, continues to rally, people will flock to, I'm saying this slightly, safety, which would be the dollar, as with these more speculative assets. And that would continue to rally, putting downward pressure on precious metals. Is that a theory that you're buying into, or at least that's what the chart?
I mean, that's what I see. I mean, I see the US dollar being in a strong uptrend. The last time we had a similar setup where I think we actually have like a major reset coming was very, very similar actually to the 2000, 2001, 2002 timeframe. And that's when the dollar really ripped higher. We had everything, including technology, all kinds of things put in a major market top. During the 2008 financial crisis, the dollar had a huge rally during the massive collapse. Both of these, create a downward move in gold and commodities in general. And I do think we're going to get into one of those. And eventually we're going to see the dollar come back up to the highs we saw in 2022, potentially even blow up and go back up somewhere around this 120 area from the 2001 kind of tech bubble peak. And of course, that push higher is going to mute the strength in precious metals. And it's just something we tend to see. When people get nervous, they naturally want to go to a currency, move to cash. They want to go somewhere that they trust. And I know a lot of people don't trust the dollar, and it doesn't have, there's a lot of stories that can go with that, but it still is known as the reserve currency. And when it's going up, even if you don't like it, you kind of want to own it. It's much better than holding a currency that's going down in value. So around the world, people start, more or less investing in the dollar, and the dollar it's a self-fulfilling prophecy. People move to that liquidation. They want to cash out of other plays and just sit, in a low volatility investment that's rising in value as everything else is falling. And the dollar was the ultimate play in 2022. We saw a huge move to the upside. The stock market corrected about 25%. So it just goes to show it does have a very much so inverse relationship during major market corrections. It naturally wants to go higher, which is going to mute commodities' upward move.
Got it. Well, let's talk about the other commodities, specifically energy and oil. It has been hammered recently within the past couple of weeks. And what's interesting to me is fundamentally you have a lot of things going for it as far as OPEC cutting. You have, I would say you have the holiday travel season coming in full swing now, or coming in full swing. right now. You have Saudi going, you also taking additional supply off. You have some drawdowns in inventory reports, yet oil continues to go lower. We're talking about oil, where you see it going, I guess. And it's also, interestingly enough, it's somewhat inversely related to gold, where gold's fairly high historically. If you had oil is coming off the highs from a couple years ago, and if not, we're scraping the bottoms of the spring. So yeah, talk about oil.
Yeah, so oil, typically we see kind of gold and oil, they can do very well just before a major economic kind of top, before a major market correction. If we were to zoom back a little bit here, that negative price range for oil definitely messes the charts up a little bit, but sorry, let me go back a little further. But what we saw back here in 2008, if we were to just zoom into this time frame, is we saw crude oil rally up, and then it really took off into 2008. It did very well. There was kind of a big consolidation level through here that it took off through, and we tend to see oil and we see gold do fairly well, and then it reversed down, and it did find some support here for a bounce, and then we went into a full on like market major recession and financial meltdown, and that's where oil took a huge hit. Now, where I think we are right now is somewhere similar to this, except for it's just dragged out a lot further. So
Right.
if we go back and now take a look at the charts of where we are right here, we have had that huge move up in oil. In fact, put in a massive double top. And this is kind of a really major level on the chart right across here. And so now we've sold down. It's in this kind of complacency move. It's just trying to figure out what it's going to do. And I feel like this whole thing is more so a big top. And so I think if we kick into a recession, I think we're going to see oil break down and go right back down into the 40s. And I mean, it doesn't matter what OPEC and all the news is. I mean, the markets are generally really aren't linked to it. In fact, it usually does the opposite of what all the news is. But if we go back in time and just look at these charts of where crude oil has been, the $40 range somewhere down here has been hit many, many times before over the past 10 years and even, before that. So I know a lot of people are thinking $40 oil sounds really cheap, but we've actually seen it, a dozen times in not that long of a future range. So there's very good potential for this to go down. In fact, could even go down even more just because the size of this topping face has got so much energy. It could flush down and have another crazy move down into the teens for all we know. Probably be a dramatic recovery, but these markets don't have a lot of liquidity. I mean, we don't have the volume we used to have years ago. When selling starts, it's like nobody wants to buy anything and things drop very quickly, which is why we get all these giant spikes and, collapses like in crude oil. So I'm more or less right now, oil is kind of trading in a big range, in a sideways range here. But I am more so bearish. I think it's going to eventually follow the economy. I think it already knows things are slowing. I find, transportation index, the energy to me looks forward. They can kind of see orders. They can see orders slowing. The shipping process is going to come to a grinding halt. And the reality is it doesn't matter what the economy does. All of these commodities and stock prices and things, they really just move based on people's perception. And I feel like a lot of big money investors think a recession's coming. So naturally they're going to short oil or sell the oil they have or the energy stocks because they don't want to be in them if we're going to go into a slow time where consumer spending dries up. So overall, I think this is telling us a lot of investors don't see a booming future at this point. And I think oil's probably going to trade sideways here and eventually break down.
Got it. So let's talk about the broader economy. And what are the charts telling you about the equities market and even the bond market? Just comment about that and what you're seeing here. And I believe and I don't want to put words in your mouth, but I believe you're looking at a significant slowdown in the first quarter of the new year of 2024. But work me through that.
Sure. So let's quickly just touch on this infographic that I like to bring up, just because it breaks the markets up into stages. Now, Stan Weinstein, I learned this from him decades ago. The market has 4 stages. Long story short, stage 1, I've shaded red, is a trendless, choppy, dangerous time to invest. Stage two is a bull market phase. We all love that. Stage three is a high volatility, choppy market, very difficult. This is what we've been in really since like February, March of 2021 for most individual sectors. Very difficult. And then a stage two is a financial reset, the 2000 tech bubble, financial crisis, all of those things. So I believe we are in a topping phase right here. And eventually we're going to kick into a financial reset where not just the markets and commodities reset, but also like real estate. And we've already seen business valuations reset in terms of like venture capital. I mean, money's dried up. So that's how I see this market in terms of stages and where we are. And if we just look at the COVID crash here and we just look at kind of the weekly chart of the SP 500, I mean, I like to look at the market like the ocean. It moves like the ocean. The tide's either going up and lifting most stocks or it's going down. And so we had a beautiful run out of COVID, a bullish market. And then we had a bearish or an out of favor market where you didn't want to be in stocks. And this was the year of the dollar, played a lot of dollar. And then we got a new buy signal and we're in a bullish phase right now. Now, this bullish phase is, I think we're going up for a double top in the market, or maybe we're going to pierce to nominal new highs, see a very strong rally into the end of the year, January. But then I feel like we're going to crash and it's going to take a huge hit. And we're going to start to see big distribution selling from institutions. We'll see high volume selling. So this whole level right through here is more so like a stage three topping phase. And most investors, the market's just trading sideways and grinding its way up. And a lot of people are getting very bullish again. And just as most people pile in, which is what we're starting to see, all the growth stocks are coming back to life. People are going to get reinvested and then the market is going to go off a cliff. And they're going to be like, how the heck did I buy the top again? So that's kind of the scenario from that point of view. If we go and take a look at the SP 500 regular chart here, I mean, we can see we're working up. We've broken the July highs, and this market it's on a tear. It's gonna, I think, continue to grind higher as we go into the end of the year with window dressing, a lot of different things of institutions and money managers moving their clients into the leading stocks that have done the best this year. And the leading stocks happen to be the large caps, the big tech. So if they're selling all their other positions and moving to the big large cap techs, they're going to drive the market higher. And that's what we're starting to see. So their investors at the end of the year get their annual report. I'm holding all the best stocks. I must be doing well and better than most people, even though, a lot of people just got shifted over at the last moment. But what's really interesting with this last move is if we actually look at the SP 500, and this is kind of our trend analysis chart, if we look at this type of price action that we actually have a bunch of gaps, price gaps on this chart. Now we've got a gap here, and gaps are really important because gaps almost always get filled on the SP 500. And these gaps, it's hard to see on this chart, but these gaps are pretty darn big. And that means eventually this market is going to blow off to the top. It's going to eventually reverse and come all the way back down. And that is a pretty big correction from where we are. That is, that's like 11, 12% correction in the market. And that's what the SP 500 tends to do. It likes to fill gaps. So it happens on the downside. Even if you have a big gap here, the market can still run lower, but eventually it's going to come back and more or less try to come in and fill that gap before continuing on a move. And it just goes over and over again. You can go to gaps way back on the charts and you'll find the market naturally comes back to fill these. So the fact that we have three massive gaps on this chart is a very scary sign. And the fact that small cap stocks aren't really participating in this rally, it's the big tech. Tech is hitting new highs. Well, the stock indexes really aren't. It's telling us that this is just a sector driven, a large cap tech rally. And a good view of that is the Russell 2000, because we can see that really it's just not participating. It's had a rally, a bounce with the market, but overall it is just channeling in this sideways channel. It had a major topping phase, had a bear flag, broke down. And this here is just a big pause before it goes a whole lot lower with the overall stock market. It could collapse back down. So that's kind of where I see the markets. And this scenario of the stock indexes pushing up near the highs, technology hitting new highs, yet all the little stocks aren't doing anything, is the similar setup that gold has. Gold's hitting new highs, but miners and silver are not. So there's not like broad market confirmation behind these two asset classes saying, saying this is going. People aren't loading the boat. People are literally just, drifting along here, and there's not a lot of traction.
It reminds me of a couple of things. Number one, it's things that tops or bottoms are usually it's really consolidated into just a handful that are dragging things up or down, if you would.
Mhm.
And then it also sets up, and I'm just going from memory here. March is typically historically, and I could be wrong, but March is typically a really tough month. So not saying we crash in March, but typically being a tough month, this is setting up for that, if I'm not mistaken. And
Yeah.
then,
So, sorry, go ahead.
no, you go ahead.
So talking about seasonality wise, we tend to see a bit of a pullback in the stock market in March, but just take a look at this overall chart. So this is a full year. This is telling us what on average over the 30 years, how the SP 500 moves. So it rallies up beginning of the year, tops out June, July, pulls back into the end of October, and then we have a multi-wave holiday rally. Now, if we just look at the SP 500 during the same time frame and just look at the year, which is right here, you can see the market has done that. It rallied up, it topped out in July,
Right.
sold off right to the end of October. Now we've got this multi-wave move into the holiday rally. So this is still pointing to higher pricing right into the closing bell, last trading day of the year. So this market has been moving very much in sync with how it typically moves. For some reason, people think this year is a totally random, weird year, but this is actually how it moves on average. And to take a look at gold, because we can do the same with gold, we can look at the gold chart. Gold was struggling for most of the year. And then just in the last couple of months, it started to come to life and it started to push up and hit these highs. Now we saw all-time highs recently get hit. And now we are in December, coming in the middle of December, gold's been pulling back for the last week and a half or so. And seasonality wise, it should find a little bit of a bottom here and try and find a bit of a bid. Doesn't mean it's going to go to all-time highs again, but
Right.
seasonality wise, we should find a little bit of support in the precious metals space. The miners have shown some life. They are making some, on a shorter term chart, some higher highs, higher lows. They've had their first pullback to support. So the miners are actually set and primed and ready for potentially a really nice little pop and rally with the market here over the next week or two. So seasonality wise. I mean, I don't use it for trading, but it is nice to just look at and get a high level view of what is the overall trend and bias kind of that's underlying that usually falls into place.
Yeah, I look at it as like your tailwinds, if you would.
Yeah,
Specifically, we don't put a trade on about it, but it's nice to have a tailwind.
for sure.
Well, before we head out here, can you just real comment briefly here as what is a longer term, I would say, if you have this, a 1 to 3 year trend, or if you would, price action on the gold market and the silver market?
Sure. Well, if we take a look at the chart of gold, the quarterly chart's probably, a good one to take a look at. So each bar here is quarterly. What I feel is kind of going to unfold is I think we could see gold. Maybe it's going to poke up here and have a little bit of a rally to some new highs until the stock market tops out, which who knows, could be this month, could be a couple months from now. Or I think gold is pretty close into its topping range. Maybe it's going to pull back. I don't think whatever happens up here is going to be anything mind boggling or like some huge rocket ship move to the upside. But I do think gold is going to go under pressure with the stock market. Could be 6 months, could be 12 months, could be 18 months, whatever, as the stock market sells off. I think it'll pull gold down, but I do think gold's going to hold up fairly well. 16, I don't see it really selling off in a huge way. And then I think we're going to see gold and silver probably find a bottom. It'll be one of the first things to find a bottom. It's what happened. We saw in 2009. And we're going to start to see this take off to the upside. And then I think we're going to 2,700, 3,500 are those kind of new, the two upside targets over the next 2 to 3 years that I think could be hit for the gold space. And of course, as the dollar puts in a bottom and silver puts in a bottom, that'll also mean that, the dollar has probably topped. Everybody's like flocked out of their assets, moved to the dollar. dollar's screaming high. And then we go to a multi-year sell-off in the dollar, which means a multi-year rally in commodities. So if we look at silver, so we can pull that up as well. Silver is one of those beasts that can just, it'll play catch up. You don't know when, but when it does, it is a rocket ship. And this chart here is primed and ready, just like the gold miners. It's built a base. It's kind of broken out of that base, and it's building a launch pad, a bull flag pattern. It's just waiting for that perfect scenario. In fact, I feel like this right here is actually very similar to this one over here. After the tech bubble, we had this setup. And so there is potential gold and silver might rally up a little bit until we get the financial crisis. This was the financial crisis where silver pulled back like 50 or 60%, gold pulled back 34. So we might see silver and gold push up a little bit, but they're going to get pulled back again. And then to me, that is like going to be like, okay, now we need to start looking at like gold miners, like, penny stocks that are going to be like 15 cents and be worth, $10 later, right?
Load them up.
Yeah, exactly. So this is the quarterly chart. Every bar is 3 months. So this isn't happening soon. These are mega year patterns, right? But it is fine. Like I see it coming, like the setup is finally here. I mean, back when it topped out in 2011, 2012, I was like, oh my gosh, this is going to take forever to like recover. And it has been, it feels like forever. But now I think we're like striking distance. We're like potentially in a year window could be a life-changing moment for a lot of investors who get positioned in some really good precious metal and potentially even uranium. I think uranium stocks could actually be even bigger movers than precious metals. So it's going to be really interesting.
Chris, I've become a huge fan. I really have. How can people find you and get in touch with you if they admire your work as much as I do?
Yeah, sure. Well, appreciate it. They can go to my website, thetechnicaltraders.com. And pretty much what you and I just did right now, walking through the charts, is what I do with subscribers every morning at 8:30 opening, before the opening bell. Get you updated on the nitty gritty, kind of more closer charts, intraday and daily charts. And I cover a lot of stocks and sectors. I focus all on trading ETFs. And we trade the hottest sectors. We invest large amounts of money trading in index, bonds, and currencies as well with a different strategy. And we use a strategy called asset revesting. And they can go to the website here and learn more.
Excellent. I'll put all of this in the show notes below on the podcast, as well as the different channels. Chris, thank you so much for your time, and would love to have you on again sometime, maybe in the new year.
Thanks, Andy. It was a pleasure. Take care.